What's up, gang? I want to do a technical analysis on QQQ and a little bit of a trade recap on two trades that we took this week. Both of them being towards the end of the week, one trade working out and another trade not working out. There's lessons to be learned from both, in particular, the trade that did not work out and a mistake that I made that I will not make again. So let's dive into the charts. So we're on WEBULL. There's an affiliate link in the video description, 12 free stocks, with each stock being valued up to $3,000. If you use that link, deposit $100. This channel will be rewarded with one free stock, and I do appreciate it. We're looking at the daily chart, and as you can see, there is, well, go back to the prior high here at $404 and this downtrend, which is now broken, and we're starting a new uptrend in QQQ. Lower highs, lower lows, reversal, now higher lows and higher highs. It's as simple as that. Now there is some fluff here from the current price level, which is $370, to this upper trend line, which also kind of correlates to the 200-day moving average. What this indicates is that eventually there's either going to be a pullback where the stock is going to, this ETF is going to consolidate and let the 200-day moving average catch up. We could, in theory, move even higher, then eventually get a pullback back to maybe these levels, where it then intersects with the 200-day moving average at around $370. So just because there is this space to the downside, that space should be considered and should be part of your risk management. That does not indicate that the stock is going to move in that direction. It's just the potential for it to happen. So you need to consider it, but it doesn't mean that it's going to hit that. Eventually, we'll catch up to the 200-day moving average, but it can be at a different price. So that's the overall trend with QQQ right now. It's bullish. We're in an uptrend, and until something changes, that is going to be our overall direction of QQQ for the longer term. Now, let's zoom in to the 4-hour chart and do some charting on some of the swing trades that I took. Now, the first thing I'm going to do is, well, I'm going to draw some boxes here for what is known as sell-side liquidity. And I'll explain them after I draw it. So right here, I have two levels of what's known as sell-side liquidity. And the market chases liquidity. So the market, in theory, if it's bearish in the short term, is going to hit these levels of liquidity, bounce up to a fair value gap, and hit this level of liquidity. So that would set our overall trend in the short term. Remember, longer time frame, bullish. Short term time frame right now, bearish. That's how I'm looking at QQQ, and that's why I got in the trades that I did. So if we zoom in now to the 15-minute chart, we can see that QQQ did hit our first target of sell-side liquidity. But then it behaved in a manner that I did not expect it to behave late Friday. And that's where our lesson is learned. Now, personally, in my personal opinion, I thought that we hit these level of sell-side liquidity, which we did basically to a T. We got a little bit below it, but nothing major and very short term. And then go into a fair value gap and then target the second level of liquidity. Well, what the market did late Friday is it hit our first target of sell-side liquidity, didn't even get out of that zone, and now has approached our second level, our second target of sell-side liquidity. This is because I believe the market algorithms do not really want to go long late Friday and hold it over the weekend on a stock like QQQ. That's my personal opinion. Even the futures, they don't want to go long over the weekend when there's lower liquidity, lower volume. So they did not put on the trade to get back to the fair value gap. They just allowed it to get to the second sell-side liquidity very quickly. And that's where I was wrong, because when the stock got into this zone, I thought it would go to a fair value gap. And that's why I got into what I did. I got into late Friday a call debit spread, which is a bullish position. And I thought that the Qs, there was a possibility that the Qs would get back to 374, 375. I bought that for $9 a contract, as you can see here with my limit price. And if this trade worked out, my returns would be $100, so over 10x if it was to happen. It didn't happen. I lost $9, not a big deal, but there was a lesson to be learned. late Friday, if the movement is bearish, don't really expect a rebound. So don't get into a bullish trade late Friday, even if it hits your price target on the sell side liquidity. So that's the lesson to be learned. But the other trade did work out because that trade I got into on Thursday, and the direction was actually a little bit different. So what I want to draw here is what's known as a fair value gap. Notice these three candles and how the wicks of these candles do not encroach on this single 15-minute candle, leaving what's known as a fair value gap. Now, this fair value gap is this range right here, so 375 to 376.50, and the center of that candle is right around here at 376. So when the stock traded above this, I believe that it would approach this fair value gap. So even though the movement is bullish here, I did expect at least some kind of pullback on Friday to get into this fair value gap, and then it could decide whether it wants to move higher or lower, but usually it would move higher. But since it was Friday, the bias is going to lean a little bit more bearish just because it's the end of the week and positions, profits are being locked, and firms do not want to take on additional risk heading into the weekend. So that sets up for more of a bearish case on the last trading day of the week. But nevertheless, as you can see, we got into what was called a call credit spread on the Qs for $57 credit. So this is a 1-to-1 risk to reward. And we did the $378, $377 strike. And as you can see, I closed at 10:33 a.m. for 90% profits. If you want these trade alerts, join the private Discord server. A link is in the bio. Every single trade that I take, I post on that Discord server. So then what happened, if we take a look at a 5-minute chart, you can see that we got to that fair value gap, but then we never recovered. And that was a play to then, if you wanted to, I didn't want to take on too many positions at the time. So this was right around when I locked in profits. You could then also target the sell side liquidity. It got to that sell side liquidity. It hung around there for a little bit. So plenty of times for you to lock in profits. And then it went lower, which this was a move that I wasn't really expecting, but it makes sense considering that it was Friday. So don't go long, even though we're at our sell side liquidity late Friday. That's the lesson that I learned. So now moving forward on this 15-minute candle, you can see that this is our second level. And then the third level of sell side liquidity is going to be much lower. If we look at the 4-hour chart and we zoom in here, you can see that there's a lot more room to the downside to the second level of sell side liquidity. So I do think we're eventually going to see a bounce here. If this level does break with some speed, then this is going to get bearish pretty quickly, and there's going to be some money made to the downside. In my personal opinion, the moves are going to be fast, but they will be very profitable if you can read the chart correctly. You want to be notified when I get into new trades. Again, I post every single trade on the private Discord server, link in the bio. So yeah, those are the two trades that I took on QQQ. That's what I saw on the charts. That's my technical analysis and trade recap. Let me know in the comment section down below what you think about QQQ and any trades that you're eyeing up currently. Share it with the community. Outside of that, I thank you so much for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and I'm out. See ya.